I'm going to go over some of the stuff that I prepared today. So first is a company named Longbridge now comes up with Platinum non-HECM reverse mortgage. This was available for everybody before pandemic. It was gone for about a year or two, and then it came back. But the problem was they were asking too much in the initial stage, maybe more than the HECM. So what they came up with, they streamlined a lot of income verification process. Instead of asking for 2 years tax returns, they're gonna look for like 2 months of bank statements. So we don't have to hunt them down for tax returns. We're gonna simply receive the 2 months bank statement showing the proof of like Social Security income or any kind of XYZ along with the transcript. As long as the numbers are matching, we're gonna proceed. If you have a 760 FICO scores, then you can expect to close within 2 weeks. And you can tell them that this is a program, and non-HECM programs don't have a upfront mortgage insurance premium. With the reverse mortgage, HECM reverse, they charge 2% of the sales price, value of the property, not a loan amount. However, non-HECM reverse do not have an upfront MIP. So we can win greatly on this part. And as the prime rate is coming down again this month, we don't have to stretch too much. We used to offer 8s and 9s with non-HECM reverse. Now it's coming back to 7s. Please reach out to your account executive for more detail. But you can also reach out to Brenda or Romy for the customized link that you see today. So you can give them an option. A standard HELOC is always divided into multiple terms. There's no prepayment penalty, and there's a monthly payment. And non-recourse loan means when someone dies after originating the loans, court has to get involved in case of XYZ. But with a reverse mortgage, the inheritance, the list of the heir will receive the power to authorize to execute on the equity right away. And even if the value of the home is lesser than the amount that they borrowed, they're gonna only consider 95% of the value of the home. So imagine that you are originating in Tennessee, Texas, Arizona, Nevada, when the property values are coming down. We don't have to worry too much about them because reverse, unlike the other programs, we don't have to worry about our applicant going underwater. Okay? Second, Triad, the mobile home finance lender, now allows us to do a co-borrower and non-borrowing co-borrower, non-occupying co-borrower transactions. So this was available in the conventional world, right? Earlier this year. Now it's coming into the mobile. So a lot of $90,000 to $240,000 of mobile homes are just floating around in Orange County and LA at this time. So we can encourage them, the high-end income earners, to just buy these small units for their parents and in-laws and stepchild, adopted child. This is now expanded much more than what I was anticipating. So you must have your own primary to apply, and there's no state requirement. You can still originate in Nevada, Arizona, California, and the loan term is 20 years. So, but the loan amount is significantly reduced. It's ridiculously low, so you don't have to worry too much about qualifying. And the loan cost, now you can charge up to 4 points. It used to be 3, now it's becoming 4 of the loan amount. And I usually maximize my origination on everything. It's still like $2,000 or $3,000. It's literally nothing compared to what we are getting into. Third, Florida Capital Bank starts a no FICO conventional loan. This was available in the middle of a pandemic where we used instead of using the determining credit score, we were averaging out. Let's say this person is a 760, this person is 619. Before, we couldn't qualify, but there were few investors who were able to average these numbers out and then originate. We were able to save some of them. But this time, Florida Capital Bank allows no FICO conventional loan because they decided they're not gonna sell the note elsewhere. They're gonna fund using our warehouse and keep it. And Giving Tree we're working on it. Our plan is to service the loan together, so we don't have to move the servicing companies. But for now, for today, this is available. LTV under 90%. When you have XYZ, a client has great trade lines, but don't have a credit scores, we can move in here. Purchase, rate and term. Okay, a limited cash out means they follow the Fannie Mae guidelines. So any cash out proceeds under $2,000 will be considered a limited cash out. DTI has to be below 40%, but you'll be surprised. A lot of people who don't use credit cards fall into it. What I had to do is send out an email that we have a no credit score, no FICO conventional loan product. And you can expect rebates. This is a non-Dell correspondent program, so we don't have to go too much. 12 months of history required for each source of non-traditional credit. This is a key. When you don't have a true non-traditional credit source, you can use 12 months of utility bill, cell phone bill, any sort of a 12 consecutive traditional statement can be submitted to KCB or CTI, and we can inject this on showing on the credit. Cost is $39 to $125 depending on how many bureaus we need to reply and update to. So if you have any deals like this, if you have any borrowers, realtors suffering that they have too many buyers who's non-qualified, who's having a difficulty with credit scores, let us know. Okay. And these are the list of the non-traditional statements. Rental housing payments. So it could be verification of rent, along with 12 months bank statements, utility bills, medical insurance premium payments, automobile payments, cell phone bills, life insurance policy, school tuition, childcare payments. You'll be amazed. This is the Fannie Mae guideline. Freddie Mac, on the other hand, we have to have one at least amongst all three. But still, when the AUS doesn't give an approval on the Fannie Mae, don't give up. Let us know. We'll run the LP. Because now we are elevating the type of credit report from the $50 one to $80 one. Running DU and LP is now free, unlimited time. So if you want to know and learn how to run DU and LP, and when I receive, I believe Brenda is doing like a one-on-one training at this time. But if you want to know, like if you want me to host group setting meetings, maybe we can host something on a Tuesday call.
Peter, I have a question.
Yes.
Can you go back up? I was just a little, I heard what you said, but I was a little bit confused by what was on the screen. If you could go back up further to the main, was this it? Oh, yeah, here it is. So first bullet point, a 3-in-file merged credit report must still be provided for all borrowers. What does that mean? So
we have to pull a credit report showing no report, no credit score, no credit score, no credit score. We still have to pay like $80-some to generate a report.
Okay.
File number has to be generated on the credit bureau so that we can run AUS.
Okay.
Credit report number and the loan number has to tie.
Yeah.
Can I jump in real quick?
So I actually did one of these. Well, I did a few of these when I was at Churchill because that's what they promoted is the no credit score, because Dave Ramsey is against with anybody accumulating debt. So this was the only way to offer a solution to them. So I used to get a lot of borrowers ask me, hey, you guys offer a no credit loan, right? But they were asking because they had bad credit, not no credit. So basically what Peter is saying to try merge proves by showing no scores that this individual qualifies for a no score.
Okay.
Does that make sense?
But how do you get no score though?
No. It'll fire back with no scores.
Let's say you filed a bankruptcy 4 years ago.
Okay.
You haven't used the credit trade lines.
A
lot of what the Florida Capital tells me is a lot of Indonesians, Chinese are doing this, intentionally using cash only for the 4 or 5 years.
Gotcha.
When they try to buy something now, they have great income, they have generating income from their business. However, they haven't established a personal trade lines.
Yeah,
They have a great business trade lines.
Yeah. Gotcha. Okay. Yeah, I wanted that. I was asking for clarification because I don't think I've ever come across someone with no credit. That's why. Yeah.
If you contact CPAs and ask for the business loans, there is a company called Mosaic doing no credit trade lines for commercial loans and solar loans right now. So any clean energy loan, let's put it that way. So we have another dealership, a solar dealership named Freedom Forever, who's accepting no credit score applicants for solar. So a lot of the norms that we have seen in 2017 and 18 is now coming up again.
Interesting. Okay. And then how is it priced as far as, the rates? Is it just a standard rate or?
Yes, it is standard rate.
Gotcha.
But there's a lender overlay of DTI under 40, LTV under 90.
Yeah, I saw that. Yeah.
So because the conforming loan went up, most of the stuff applies and will work.
Yeah.
This is the killer feature.
Yeah.
And if you use this along with the rate buy down, you can be one of those builders saying, hey, I can give you 4.99% rate today.
Yeah.
Stuff like that can be applied. Of course, in the parentheses, you have to put seller credit or buyer agent credit must be applied to buy them. I've seen a lot of Guild Mortgage is the company name, doing 4.99 conventional loan right now. It's all out the Instagram and Facebook. But I called one of them, and they were telling me that I have to pay 2.25% fee to get the rate. And on the Florida Capital, I was able to get it for 1% rate buy down because our part is at 5.625 right now, right?
Yeah.
So it's a lot of new things are coming up.
Yeah.
And fourth, the second trusted HELOAN, home equity loan, was only available for self-employed guys, providing bank statements or tax returns. Not anymore. Starting November 1st, Mega Capital is accepting written VOE second. Quantic did, but their CLTV was capped at 65%. But Mega Capital is going above 75%, 10% more. So I didn't trust them, but I took the leap of faith, sent out a mass emails, and then one guy fell. And he said, hey, my brother operates a business. Surprisingly, my brother and I have different last name because we have different parents. Great. So I asked these guys to generate a written VOE. So we made this client making 660, 667, 100 a month into like almost 20,000 a month monthly income. Look at the CLTV, LTV of 19 to 74.8. Stupid thing just happened. And DTI of 13, housing payment to 48.9%. Right? Investment, second trusted on a second principal interest. It's not an interest only. VOE is available. We locked in and we're ready to close this loan next week. $190,000. I'm charging 5 points. It's a great another win for making $14,000, $15,000 because no one else is doing it. And does it show the rate? Let me see.
10%?
%. It's cheaper than hard money loan. Don't be afraid. When your client has a higher credit score, trade lines, and someone who can verify the income source, we can creatively make the structure. Or I think that's the power, true power of Giving Tree is structuring the loan to favor the applicant's needs and wants. And then second and the third options come in the way. Everybody has hard money loans. Everybody has this and that, but how do we locate them? How do we, transfer from this person, financial crisis person, into something better? A lot of HELOCs that I'm seeing have 13 to 14%. Full doc loans are getting 13 to 14%. We can tap into them, encourage them if they have no will to pay off in next year or two, refinance that HELOC into HE loan and charge another point or two. How I charge is when I save, let's say $400 monthly saving, I calculate this times 12. And I encourage them after the 13th month, they're gonna start saving. But I'm skipping them 1 month payment anyway. So most of the times, on month 3 or 4, they're gonna financially benefit by originating the loans. And that's how the loan approval comes out, even though I'm charging heck of a lot of fees or higher rate. High price mortgage in California state is very easy. A lot easier than Arizona or Nevada. High price mortgage in California is significantly higher. So we don't have to stretch too much. Texas, on the other hand, is difficult. Only the Rocket mortgage allows us to do HELOC and HE loan. That's the Texas rule. We have to have another origination license to originate for the second, but you can use my license to originate there. But any questions so far? If you don't have any questions, have a great rest of your week, and let's see you guys next week.
Oh, Peter, actually, I do have a question. These notes that you have on Excel, do we have access to this?
Yes, if you go to Google Drive, all the ones with Giving Tree emails should be able to access, but let me give you a custom invitation. Freddie, see.
Yeah, thank you. I was gonna.
Christine, who else? Paul.
Rogner.
So you'll be able to see all these notes. Starting from Q2, I try to put all tabs in there, so you'll be able to go back and see. Or you can click this, icon button and go back and see what kind of versions that I was using before too.
Great, thank you so much.
But make sure you don't save, even if you upload the older version. Please, make sure to go back to revert. Any other questions? I'll share when we have a new programs that's coming up. Mega Capital started something called Super Mega that goes up to $10 million for P&Ls. And I'm doing one with Andy at this time. I'll share if I have a win. There's something crazy is happening for sure. We don't have to go by the underwriting guideline, especially with non-QM. When they say 2 mil, 3 mil, 4 mil limit, and if you have a deal that's out of the norm, please reach out to me directly. It's too early for me to release everything because I don't know fully too. Like this one too. If the loan approval didn't come out, I wouldn't have presented to you guys. But I'll be the guinea pig. I'll go through and fund first and then share how things are later. But if you have anything that's lively, that's actively moving along, please don't hesitate to reach out to me. Okay, have a good one, guys. Thank you.
Thank you.
Thank you, Peter. Have a good day, everyone.